Bruce Fraser. Welcome back to Face, King of X and O's.
You guys are reading my mind. It's all I
Huh?
want to do. It's all I want to talk about.
X's and O's?
X's and O's.
Yeah.
So,
All right. Well, love and kisses to you, Bruce, and hope everything's been going okay. Top of mind. Interested in what your work is showing going into this election. I remember last time you had some really high numbers for completions of up moves off your point and figures in the S&P.
nosebleed levels.
Yeah,
So,
that's right.
we're, yeah, we'll talk a little bit more about that to kind of a reminder, but also, I'm a pure chart guy. It's like in my world, reasons are optional. I just look at the charts and I'll try to keep any kind of fundamental comments to a minimum. But I have to say, Dale, really tough assignment having me come in 2 weeks before the election. It's
Yeah, it is tough.
yeah, you always give me the tough ones.
Yeah.
So
Well, I'll have you here a few months after the election too. So yeah, it's understandable, and we were talking about it, Bruce, that to lighten up, maybe not to be as aggressive during this time frame until the dust settles. Who knows how long that'll take? But definitely, I think you have to reduce position size in this environment.
well,
Do you do that?
I'm gonna make a case for that very same thing. So
Okay.
um
So kindred
and
spirits again, huh?
always, yeah. So
Yeah.
Dale and I
Okay.
go way back, and we both have similar origins in our careers. And we always just this is a highlight for me is getting together with you and Blake and the guys. And great
Uh,
comments today. So thank you so much. Um,
Thank you,
so
Bruce.
if people are enjoying our Wyckoff discussions, they can come check us out every week. Roman Bogomazov and I do these. We just did a free one, so come check that out. And you just go to wyckoffanalytix.com. And then the other thing I just
Nice.
want to point out is that I'm going to do a workshop special with Roman, kind of a once in a lifetime thing where I'm going to do, for those that are interested, a workshop, two parts on long-term campaigning. And you'll see why as we talk a little bit more here. But
Yeah.
you all went to the 10-year yields, uh, and I just wanted to just sort of look at the bigger picture. I think it's very interesting right now. And Dale, this is a chart from August of 23, and you can see 22 to 23, there's this big
Yeah.
accumulation structure after a run up. Now, you're looking at yields, not price. So what we're doing, and point figure works so well on yields. And you can see that we had a target of 480 to 520. And we did, in fact, go right up to 5% on the 10-year, and then a very sharp break. And that is always a clue when you get a sharp break like this that that was a really good point figure count objective, and something has changed. We have a range bound condition at the best, or in possibly even a downtrend of sorts. And so here you can see that we went down slightly below. In this case, we formed a redistribution, and we went just one box from hitting our objective right here, and less than 10 basis points, and then a rally. So I think that, listening to your comments, that I completely agree that what may happen here is we may get a pullback to, again, back to the target zone and build a bigger count. And this bigger count could potentially lead, this is a little too early to tell,
Yeah.
to a more a bigger and steadier advance of yields back up again, maybe not to the highs, but let me tell you
Right.
why. So now here is a 5-year yield study, and this is really I work off of this time. This is daily. It's one box reversal. I'm trying to pick up swing trades. This is great for trading yields, and you can see that we have a count here that fulfilled beautifully exactly at 490, and then we had a distribution count. It went exactly to our objective. We did another count and missed it by 10 basis points less than, and then a distribution count, which gave us lower yields. We
Yeah.
went down. Now let's bring this up to date. And this is the Fed's rate cut, 50
Yeah.
basis
At the
points.
bottom.
And
Yeah.
Dale, I think that the Fed had a huge overreach there. You know, they never cut 50 basis points unless the wheels are coming off the economy. And they cut 50 basis points and right before the election. So it has kind of a tinge of being political. I don't know. Nobody knows.
Or
But
could it be, Bruce, the financial equivalent of Bush's trip to the aircraft carrier mission accomplished? That was premature, and he's now stuck either with possibly not lowering rates or even have to reverse his course. Is that mission accomplished? Was
completely agree.
hubris, wasn't it?
Well, I think part of this too is they just want to get their borrowing costs down. And,
Okay,
their big push was getting inflation down to that 2% level. And they cut 50 basis points when they were still well above their targets.
right.
And so a little premature, I think. And I believe the effect of this is going to be one of them is going to be that we're going to have higher inflation next year. Now, will it be to the high levels that we had a couple of years ago? No. But it wouldn't surprise me if they're not fighting inflation in 2025.
Not if Trump is elected, because Powell will be gone.
That could very well be too. So,
So he'll find his own Arthur Burns to finance everything. Don't you think? He'll put Arthur Burns in there.
well, we laugh because
Uh, we
Arthur
know
Burns,
what.
yeah, he
How
gave
about
us the
George
inflation of the
Burns?
70s. Yeah,
Yeah,
I'd,
how about George Burns? You know,
I'd
so
rather have George Burns. We're dating ourselves, Dale.
that's
That's
no
too
secret anymore, Bruce. We're ancient warriors, buddy.
We are, yeah. All
All
right,
right, go ahead.
but is this all bad news? Not at all. And this is a decennial pattern, and it basically is just lining up, going back to 1897, all the years that ended in zero in the decade, the ones, the twos, the fives, the sevens, etc. And Dale, it's remarkable to me. I think I've shown that here before how closely we are following that roadmap in the current decade. And
Hmm.
so here we are in the fourth year, and this is a sideways year after a good run up off of a second year low. It's exactly
Right.
what we got. Look at the family resemblance between our Wyckoff accumulation schematic, one of them anyway, and the decennial. They look so similar. Well, this is what the fifth year looks like. So
Wow.
if the
Melting.
Fed, yeah, if the Fed kicked us off right about there with a 50 basis point cut, which is like, a shot of adrenaline. And yes, we may get higher inflation next year, but we may also get the best year of the decade for the bull market. And
Yeah.
so I just want to give you that backdrop
Yeah,
for
because
the
a
big,
lot of people think, if you didn't maybe they don't look at charts, but they think that 2025 could be a year of reckoning, and that a lot of things have been held together through this election
Yes.
cycle. But
Now,
this is more bullish. This is more bullish than someone who I thought was an uber bull looking for 7,000 in the S&Ps a while ago. This you're talking about probably what 10,000 in the S&Ps.
it's so hard to tell, but interestingly, the decade that really had a family resemblance to this, and many of them do. I've gone back through every decade as far back as there's stock market data. And one that was really close was the 80s. And
Oh,
there were
from
many that
82
were,
on. 82 was
yes,
the birth of
82
the
on, that was the low.
right.
And then absolutely. So you could line this up and look at the 80s, and it's pretty interesting. But from a Wyckofian perspective, Dale, this is a big accumulation, as
Yeah.
this is. And of course, this should produce a point figure count. And so let's, in fact, do that. I want to show just quickly one other seasonality chart, and that is this is I go back with and thank you SeasonX for letting me do this work. Is I do the seasonality for the year of the presidential cycle. So last year I did the third year of a presidential term. Last year was amazingly accurate. This year, election year seasonality. The red line is the S&P 500, and the blue line, a little harder to see, is the seasonality chart. And
Okay.
they look a little different. You know, the highs and lows are a little out of sync with each other at times. And you can see here, this one lined up pretty well. And then the low got pretty close and so on. But the big thing was look at the tone. The
Yeah.
tone has, I think, been very consistent with what the market has done. Now, you all had talked about the idea that there could be a little bit of a reckoning coming into the November election. And I think that this lift that we got since September is really a function of the Fed. The Fed
Okay.
gave us like that shot of
So
adrenaline,
it
and I think,
overcame the seasonality.
this is what I'm thinking. And but also I wonder if it just comes later and it's briefer. Maybe it comes
Yeah.
like
In
Blake had
November.
said. Yeah, Blake had said, this election is not going to get certified right away.
Right. Yeah.
So maybe the trouble comes into November,
And
and
then we
it's not till
blast
we get
again.
later in the month before it gets resolved.
Yeah. Okay.
And
Interesting.
so
Okay.
that seems to be the way the year's going. And the only other thing I'd point out on this chart is October is the worst seasonality month of the year, and November's the best.
And so far we're up in October.
Yes, yes.
So
So
we could still shake the trees going into the end of the month and into the
right
election. And if we do shake the trees right away, you'll hear crash talk, and it's not going to be a crash. What
doesn't.
maybe it's 5%.
Yeah, right. It could be scary when it happens, but it's um, uh, a tempest in a teapot. So
So it's probably going to happen on the retaliatory strike by Israel on Iran.
very well. Well, there's all kinds of.
Yeah, triggers.
Well, I mean, here we have China surrounding
Yeah,
Taiwan. We have,
yeah.
I mean, there's all kinds of things
Did
that could
did
come
you
into
know
play.
there are 2 months a year, Bruce, where the Straits of Taiwan are the most conducive to an amphibious assault, and one of them is October because the seas get very rough. So there's one in the fall and one in the spring. I forgot the
That's
one in the spring.
fascinating. Very
So
interesting.
so when I heard that, and I know what still can remember what month it we're in. Um, it made me think, could they be getting ready to make a move? And, what can we do um, with all the uncertainty around leadership here?
Well, and we have war games going on in the Pacific
Yeah.
right now. So we have a, a number of countries engaged in this, and it's all related to Taiwan. So there's all
You know,
kinds of
yeah.
tension.
I'll just leave it with one thing that's different than your stuff. Do you believe in any astro stuff, Bruce? Are you
Well,
are pretty devoted to Wyckoff?
I've certainly seen and studied that in the past. I'm no expert, but I've known a number of people that have done great work in that area.
Yeah, well, I interviewed this gal, Margot Amala, and that's what she does. She knew how to trade. Anyway, just to put it out there, she did a chart comparing December 1941 with what we have this December 7th. And she said she's never seen more of these clusters at that time. So just a day to be aware of.
Wow, wow,
Yeah,
really interesting.
because
Maybe that
we've been whistling past the graveyard forever. There's got to be at least one freak out, don't you think?
absolutely, and that that maybe that is this seasonality dip right here as it comes out here someplace,
Yeah,
and so I and you just can never know about these things, but very interesting. And I'm going to make a case right now for why I think caution is warranted at this time for the reasons that you just described.
yeah. There, we're in the extreme greed, not the extreme greed, but we're there.
We're there, and I'm going to show a couple different measures, and this has me anyway wanting to be low to the ground, and for on a more swing trading intermediate basis, even though I'm going to talk a little bit about the longer term. So anyway, we can see here extreme greed on the fear and greed. This is a great little indicator. But look
Yeah,
how long we've been up here now, this
yeah,
yellow box over here. And, just there's a tremendous amount of optimism, and
yeah.
optimism
T-shares.
normally, yeah, gets corrected. And we look at
Yeah,
sentiment as environmental, and it's not a perfect timing tool, but the environment is very, very important. And then we turn
sure.
to Wyckoff for our methods
Yeah,
for timing.
yeah. You got Nvidia making new highs. So even guys like I think it was Druckenmiller relenting about his regret of getting rid of it too early. So there are the seeds there for some kind of shakeout here.
Right. And now here, this is equity call put. So what I did is I inverted it so that it lines up with the market better instead of doing a put call.
Yeah,
And Dale, you'll notice that blue line is a 10-day moving average, which is
yeah,
really kind of what I focus on. But look at these two spikes
yeah,
here.
yeah,
And so you can see that the equity put call is now showing a tremendous amount of call activity and has moved the 10-day moving average up to the highest level of the year, and somewhat of a bell ringer. And again, to see that kind of optimism in the marketplace, I think automatically argues for tightening stops, being cautious, etc.
yeah. And, I mean, look, if you're bullish, you want to hope this happens because everything will get cheap, even miners. Everything, even things that are performing, may
Yeah.
come off in this environment. So get your shopping list together.
Oh, exactly. We love when the market gives us opportunities to buy, at good values. Now this chart is, I'm not going to get a
Throw
lot into it because I know we're limited on time, but so you can see here, this is a long-term secular trend chart using Wyckoff trend line technique, going back to 2010 on the NASDAQ 100. And at this time, you can see that we are overbought and throwing over this long-term trend channel. We call this the overbought trend line. And this was back during COVID, which I think was uh, uh, unique in the ages for extremes of optimism. And if you look down here now, this is actually put call on the bottom. It's so when it's low
yeah,
here, it's showing extreme optimism, and when it's
right,
high, pessimism. And look where we are. It
yeah,
shows that the now the other thing is this is really long-term data for put call. This is a 10-week moving average of the ratio. No, I don't know
that
anybody
is.
that does 10-week moving averages of put call,
No, no,
but note all these touches, Dale.
yeah,
And we had this extreme during COVID, but that was helicopter money,
right,
by the Fed back then. Not going to happen again. But here we are touching levels that often coincide with at least corrective tops, like right
right,
here.
yeah.
And
So, so
yeah,
if we negated the throwover, that opens the door for the lower blue trend line.
and you're way ahead of me because yes, we want to watch for a break back below. And really, quite honestly, the Nasdaq 100 is weaker than the S&P
Yes, it has been.
because the Mag 7 stocks are being reduced in exposure by institutions, and that is flowing over into other areas of the markets right now. And
Yeah,
I can just show you visually. But here you can see this is a chart through Friday. This is the S&P. Now, just people screen capture this. This is my note taking for the market using Wyckoff. This is how I keep track of my thinking.
oh,
And
thanks for sharing that, Bruce. So
so, yeah, people are
that's
going
an
to have to
order.
go back.
Take a
Say, sorry,
screenshot.
Dale. That's
That's an order. Take a screenshot right now.
right.
Oh,
And but this goes to your point, Dale. Look at the throw over here.
yeah,
And so this throwover of this upper supply line or overbought line, if it comes back in again,
yeah,
then this could produce some volatility
yeah,
in a decline. We have an overbought market. So this is stocks above their 50-day on the New York Stock Exchange right here.
yeah.
And you can see that we're overbought and we're diverging, meaning that we're not making higher highs with the index itself. So
Have
the
you
number
looked
of
at the weekly momentum? It's even uglier.
it's even uglier. Interesting. I don't
Have
have
you?
that with me.
All right. Well, that's your homework assignment.
I will. I wrote it down.
All right.
So
Weekly, those divergences are glaring. You don't need your cursor to see that we're putting in lower highs of momentum.
so when you get the third thing here, Dale, which is directionality, then you have the sun, the moon, the stars lined
Mm-hmm.
up, thinking of astrology
Mm-hmm.
or
Mm-hmm.
astro, whatever is is once you get the downward trend going, it's oh boy. So we have two of the three conditions. We start to break down through that overbought line. We could create some volatility, and with that, I think the directionality would kick in. And there's a closer look, and that is actually through yesterday. So
So
you
we're
can
on the
see,
verge.
yeah, see how that yesterday we
Yeah.
did go down and touch that line and then found support.
Okay. Well, we took out yesterday's lows today.
So there you go. So we're
Yeah.
now at least below that upper line right there.
Yeah. Negating the
So
throwover. Okay. Really
uh,
quality stuff. Yeah. Okay. Then after this happens, then you could be looking for targets. Get ready to buy the dip.
Yeah, so just real briefly, I've shown this chart here before. This is a chart I did in
Yeah,
January of 23, and everybody but Dale thought I was certifiable. And you can see I took this count. This is the accumulation structure I
yeah,
showed you the schematic of earlier. But this count objective, if we take the whole count, counts up to 6550. And of course, we are not there yet. So I just wanted to just show this historical chart. And so now let's kind of bring this up to date. So this is the same chart area, but the
right.
scaling is 50 points instead of 25.
Yeah,
And you can see also that how this just launches out of this accumulation area after we had that last pullback,
yeah,
which was on that prior chart. And this count takes us up to now, just because the scaling slightly different, 6350, 6700. So that could be, and oh, the other part, Dale, is this count could, following the rules, could be made a little bigger. So you had made a comment about 7,000 plus. This would do it. This would do it. That bigger
okay.
count.
All
So
right.
I in Wyckoff we say stop, look, and listen. And so when we hit those targets, if we can hit them, then we would watch to see if new accumulation or reaccumulation structures get built to get to the higher targets.
You did it again, Bruce. Every time. Listen, I think it's important you give us that screenshot again about what you and your partner are going to be teaching, because I guarantee you there's people that are going to want to learn from you, like I do, and we do every time you're here.
Well, you're wonderful. Let me just show you one other thing. This screenshot this, everybody. This I
Oh,
wrote a
go.
blog about this gold chart. This is monthly bars back
Yeah,
in 2018. So you can go read this at stockcharts.com, this blog. It's,
yeah,
it's free. It's not behind the paywall. And here's this beautiful Wyckoff accumulation. This is what's happened since.
yeah.
And this is just counting a portion of the yellow shaded area. And so that is how much potential we have. Whether we get there or not, remains to be seen, but so far so good.
Yeah,
So, and
we
that
will.
doesn't even count the bigger accumulation that's underneath it.
Yeah.
So,
Then you get five,
yeah, exactly.
right?
So, um,
Okay.
let me see if I can get back to the beginning here, and I'll just put that up as we say goodbye. So,
Really a great conversation today, buddy. There it
it's
is.
always so much fun to get together with you all,
Yeah. Yeah.
and
I
you
love
know,
being able to, you know, talk to you about an alternate. We have to look at both cases, right? As good traders, we may have a, technical bias, whatever it is, a narrative we've embraced, but I'm always teaching that people also have to consider the bear case if they're bullish. So they're aware of a shift beginning to occur. If you're just a, raging bull or, a blind bear, you're not able to change your mind because your mind is closed. So keep an open mind. It will keep your account open.
wiser words were never spoken, and that's wisdom for the ages right there. Thank
Yeah.
you.
So yeah. Well, so dates and do people have to make reservations to be there, or just show up, or how did they attend the webinar?
There's one that we did just a few weeks ago that's available via Wyckoff Analytics and YouTube. You can go to the
Okay.
Wyckoff Analytix YouTube page and go watch there. This just is very recent, and just learn more about what we're doing. And then, of course, if people want to sign up for long-term campaigning, which is very specialized, it's
Yeah.
for people that want to find good technical campaign stocks and then hold them for the duration, and which
Yeah.
is one of my favorite things to do.
Yeah. And if we have this, a little bit of a cleansing into the end of the year, then it's set up to, blow off into the spring or summer again. So,
Exactly.
yeah, so a perfect environment for that type of campaign trade that you're talking about.
And I
So,
think Blake's comments were so good. I mean, it's just like I can see two or three different scenarios where the market would not be happy in the post-election period, and where
okay.
it would, and mainly it would be uncertainty. And Blake really presented it better than I could, but that we have, uh, all the conditions for a correction that could disappoint all the optimism out there, and that could give us into the later part of the fourth quarter a correction that could be very viable.
Yeah, maybe people might remember their history if they're not learning their history on TikTok. Like Bill Maher
This,
says, the history is that tariffs were a major contributor to the depression in the 30s.
there you
They're
go.
not great because
Yeah,
tariffs are not great for the economy,
that's right. And
especially if we
so
have supply chain disruptions from who we're trying to punish that has leverage over us by having the production that we have not rebuilt in this country. So,
I I think, and just as a concluding thought, because Blake mentioned this, is that go back and study the 2016 election, because it was a huge surprise that Trump won in
yeah,
2016, and the market responded bullishly. We have
not
this
at
thing in
first.
markets, rule of alternation. And
Yeah,
so what
right.
if everybody's anticipating, as Blake said, a Trump
Yeah,
victory,
right.
and you have all this optimism, which wasn't existing in November of 2016, and it's got to be corrected.
It'll be
I
the
mean, think about
opposite.
that 10-week moving average of put call.
Yeah, yeah. There's going to be some great, uh, look, it's happened. We're getting like moves in silver. We're getting, I mean, moves that I haven't seen for years. So, I mean, VIX 60 since you and I last talked. There's a lot of aberrational kind of stuff going on, Bruce, that makes me think there's an issue with market structure.
Right. And also, I really think that the Fed just did a massive overreach with 50 basis points, because they effectively, I think, threw gas on the fire of prices. And
Remember, oh, go ahead, finish.
no,
If
no,
you
no,
want.
please.
No, do you remember a guy named Trader Vic?
Oh,
Vic
yeah. He wrote a
Sperando?
great book. Yes.
Yeah. All right. Well,
Yeah, read it.
I interviewed Vic and I said, "So Vic, do you think the Fed is making a policy error?" And his comeback to me was, "Dale, the Fed always makes policy errors." Okay. I mean, that was really classic.
That,
Uh,
well, and so true.
yeah.
Some are
Anyway,
bigger than
buddy,
others.
I could talk to you the rest of the day, but I know you have things to do too. Great presentation, and we'll talk again in January. So, um,
Wonderful.
I hope everything goes well for you this quarter, and
Thank you.
your family and your friends and associates come through this like the rest of us unscathed.
It's great to be with this wonderful community, and say hello to everybody and thank you.
Bruce Fraser, everybody. Follow him on X at RD Wyckoff or Wyckoff, depending upon how you want to give the Y.
There it is.
And he's teaching. You don't know how rare it is to really have someone with this kind of experience to teach. for you to learn. Take advantage of it. And don't just count your pips, count your blessing. Okay, German is Wyckoff. Okay, thank you guys. All right, Bruce, take it easy, my friend. That's a wrap.
Thanks, everyone. Take care. Thank you, Dale.
All right. You're welcome, Bruce. And you could join the team in 8 minutes on the Morning Edge. And if you're not a member yet, spend $1, get in there, and have a good week with them. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.